Ladies and gentlemen, dear participants and guests of our webinar, I propose that we can start our online seminar. And the topic of the webinar is the Chinese market for foreign investors, the peculiarities of this market and the process of becoming a qualified foreign investor in China. And today we will have three speakers. My name is Anton Kazantsev. I'm the head of Asia Fixed Income Group at C-Bonds. I will give introductory comments on the Chinese market, as well as talk about the data that is available to C-Bonds clients. Our guests from CITIC Securities will tell us more about the equity and bond markets, the process of becoming a QFI, other ways of entering to the Chinese market, and the services their company provides. At the end of the event, you will be able to ask your questions to the speakers in our chat. So write them there in the course of the presentation, and we will try to answer them later. Let me start with some brief information about our company. C-Bonds is a financial market data vendor covering global bonds, equities, and ETFs. C-Bonds' core business is to provide the financial market data via website C-Bonds, as well as API solutions and mobile application. The website cbonds.com covers the financial data in the developed and emerging markets as well. Talking about Chinese market, we have about 300 Chinese government bonds, over 9,000 municipal bonds, and over 16,000 corporate bonds in our database. You can see the detailed market structure in the chart to the right. The largest share is held by bonds which are linked to the government. The Chinese government sector is very developed. Bond issues are large in volume and are considered as a safe investment. Policy bank bonds are also related to the government sector bonds, as policy banks in China are kind of development banks. So why China is so interesting now? And the Chinese bond market itself is the second largest in the world, behind only the United States market. The Chinese domestic market offers many different financial instruments, different yields, and ways to enter this market. The Chinese currency itself is interesting because inflation is quite low, especially if we compare it with inflation in the European Union or the United States. Therefore, real bond yields can be quite high, which is attractive for investment. The Chinese authorities are showing their interest in opening up financial markets to foreign investors. New participation programs and market access mechanisms are opening up, and more financial instruments are becoming available to the foreign investors. Also, I guess we can say that in the current environment of global risks, investors around the world are looking for new directions for their investments. On their investment destinations, one of these investment destinations is emerging markets, of course, of which China is the clear leader. Investments in China bonds can help to diversify and reduce inflation and currency risks. Foreign investors are currently very small bondholders on a national scale. However, there are foreign investors who hold more than 10% of China's government bonds. Most of the investment is in government bonds and bonds of Chinese development banks. So again, mainly the government sector. Investors choose them primarily because of the high reliability of such investments. C-Bonds, our company, C-Bonds database, provides a wide range of functionality to customize your bond search according to your specified query, your request. You can select many parameters such as currency, sector, yield, bond maturity, and so on. In addition, using our site filters, you can select only green bonds, convertible bonds, and so on. However, you can also exclude them from your search, so it's highly flexible. First of all, you as an investor need to understand how to identify the exact bond. On our website, you can find identifiers for bonds that will help you to identify them. For example, it is the ISIN code or the code on the Chinese interbank market. Such identifiers are shown in the screenshot on the right side. Also, Chinese bonds are listed mainly on the Shanghai and Shenzhen exchanges. You can see the listing data on the left side of the slide. Further, you will be interested to know the current market situation of these bonds and their quotes. In addition to daily quotes and off-day quotes, we publish real-time quotes on the interbank market and Shanghai exchange. We try to expand our sources of quotes for your convenience and better information. In addition to the basic bond parameters that relate to issuer, maturity date, coupon, the type of bond, and so on, our database also contains more specific information on Chinese bonds. For example, these are credit ratings of Chinese issuers and bond issuers. One of the main data providers is the rating agency, and for us is Penyuan. On the bond page, you can find not only the current rating, but also the history of previous rating for the company or issue. This information is, of course, important for considering the risks of investment in certain securities. In addition, we provide information on some specialized bonds, such as variable rate bonds. In China, the rate often changed by decision of the issuer after a certain date. In our database, you can find information on convertible bonds or partially redeemable bonds with nominal amortization. We reflect these changes in the cash flow, so it is convenient for you to plan the coupon income of the bond. Our website has macroeconomic indices, including GDP, central bank interest rates, industrial production, and others. Also yield curves for different tenors and different credit ratings of bonds. Credit default swaps, interest rate swaps, exchange rates, and benchmarks. Our sources are official Chinese platforms and institutions. For example, the National Bureau of Statistics or China Foreign Exchange Trade System, and finally, China Central Depository and Clearing. Our company provides different options to get your data. Today, I have presented to you our data on our website platform. However, you can retrieve it using Excel add-in. It's our automatic way of receiving bond data via Excel formula. We also provide our API solutions, data feeds in any format. This option is the most popular among our corporate clients. And of course, our mobile application that allows you to have financial market data in your smartphone. Thank you for your attention. If you have any question about accessing our database and about any of our products, please do not hesitate to contact my colleagues. We will be glad to hear the wishes of our clients and market participants. Please also feel free to write to me with questions about our Chinese market data. I would now like to hand over the floor to our next speaker and introduce him to you. This is Mr. Si Yan, the head of sales for fixed income division from CITIC Securities. So, Mr. Yan, please, the floor is yours. You're welcome.
Hi, thank you. Thanks, everyone. I am from CITIC Securities fixed income department, and I'm covering the global investors for them to enter the China bond market. And before I jump into this topic, I would like to introduce our company and our FICC business a little bit. And as you know, CITIC actually is a leading investment bank in China, but outside China, not so many global investors are familiar with our firm. And CITIC actually is the investment bank platform of CITIC Group. And we have the international credit rating by S&P BBB+ and the Baa1 by Moody's. We have a very strong investment banking franchise. We rank the #1 for both the equity and bond underwriting in China for many years. We also have a very good and one of the biggest and largest and best research team in China. So if you need any English reports about the equity markets, also like about the bond markets, so I think the CITIC Security definitely is one of your choice. As I mentioned, CITIC Group is our parent company, and it is a very large SOE with a variety of businesses. Besides the investment banking arm, CITIC Securities, CITIC Group also has the one of the largest asset management firms in China. This is China AMC. We also have commercial banking, which is called the CITIC Bank. This is one of the largest banks in China. And for our overseas business, we have CITIC CLSA, and this is our overseas subsidiaries. It has 20 offices in Asia, Europe, and the United States. A lot of the US dollar bonds and also the CNH bonds are actually traded through our subsidiary CITIC CLSA. In terms of our FICC business, we have the full underwriting, trading, and the clearing license. We rank the #1 for almost all types of bonds, especially for those race bond, which means like China government bond, CGB, policy bank bonds, among all the security companies. We also have a very strong trading team. We have the largest balance sheet and the prop desk in China. Right now, we have more than 95 traders cover all kinds of FICC products in China, including cash bonds, bond futures, interest rate swap, FX, also TRS, total return swap. We are the king liquidity provider to global investors. As a bond connected dealer, we ranked the #1 amongst all dealers in the past 2 years. Our market share is about 10% of the whole bond connect market. And last year, we actually traded with around like 900 offshore accounts. Because of our trading size and so we have a very large team dedicated for global investors. Right now, we have 12 sales members cover the global investors. And we also have 7 flow traders and 3 analysts. So our team actually include almost over 20 members to cover the global investors right now. So this is a brief introduction of our business. So next one, I will introduce a little bit about the China bond market. as Anton mentioned before, the China bond market right now is the second largest market in the world. And in the past 10 years, you can see actually the market growth actually is staggering. So the annual growth rate is about 19%. At the end of 2022, the market size is about renminbi 140 trillion, roughly 20 trillion US dollar. If you take a look at the further breakdown of the market, the top right chart, this is the bond type. Right now, about like 60% is what we call the risk bond. Like China government bond is 18%, policy financial bond is 16%. Also, the local government bond is 25%. And another 30% is credit. And if you look at the issue type of credit bond, majority issuer in China are SOE, like the central SOE and the local SOE. Private sector is only about like less than 5%. And another thing I want to mention is the local ratings in China. All of the credit bond are local, are rated locally. So the rating is very skewed to the very high end. Almost all the credit bond rating in China is rated like AA minus or even higher. So even for the same issuer, if you compare its local rating and the offshore rating, there would be a very wide gap. Sometimes there would be 8-notch difference. The reason for that is in China, only those bonds with AA minus and higher can be pledged as collateral. So domestic rating companies are forced to rate all the credit bond rating higher in order for those bonds qualified for collateral in China. And this is the investor structure in China. So if you look at the left chart, the blue bar is bank, and the red bar is also the wealth management product issued by banks. So from this chart, you can see actually the banks are dominant players in China bond market. And the yellow one is global investors. As Anton mentioned before, it's only about like 3%. It's still very small in China. And the reddish bar is security companies like us. We are also hold a very small amount of onshore bonds. But we, our business is trading driven, so we contribute a lot to market turnover and market liquidity. And this slides give you some idea of how the China bond market liquidity looks like. So if you look at the right chart, the Chinese government bond, the bid-ask spread is less than 2 basis points. So, and this is also same for the policy bank bond. So in China, actually for the risk bond, the liquidity is very good. For the most liquid 10-year CGB or policy bank bond, the bid-ask spread is less than 0.5 basis points. So it's very easy for you to do like 500 million yuan per trade, and it's very easy for you to buy and sell. But for other bonds like credit bonds, the liquidity is not good. Even for some what we call the AAA+, this is the best credit names in China, the bid-ask spread is about like 2 basis points to 5 basis points. For other credit, the spread would be even wider. And besides the market size and the liquidity, I also listed some other reasons to invest in China. One thing is the low correlation with other market. As you know, this year the other markets actually, like US Fed, they continue to hike the rates, but in China, PBOC is forced to cut rates to stimulate the economy. So the bond actually performed pretty well. And if you look at the correlation between the CGB and with other developed market, the correlation actually is very, very low. So if you buy the CGB and other China bonds, it will help you to diversify your risk. And another thing is that for global investors to buy the China bond, it's tax-free. And the tax exemption period is from November 2018 to December 2025 on corporate income tax and value-added tax, which means if you buy all kinds of bonds in China, you don't need to pay any tax. For our local investors, we need to pay like 25% tax. But for global investors, there's no tax at all. Some investors also would ask what happened after the tax-free period end after 2025. My answer is I don't know. But from past experience, Ministry of Finance usually will extend the tax exemption period because they want to attract more overseas capital inflow. So this is the most likely scenarios. And the third reason is flexible settlement for global investors, because sometimes the global investors, they need to actually do the FX exchange. It takes time. So for our domestic investors, we could only do like T+0 and T+1 settle. But for the global investors, they can choose T+0 to T+10 or even longer settlement cycle. So this actually is an advantage for the global investors. And other reason is the China government bond and some of the policy bank bond already included in the major global indices like Bloomberg, Barclays, FTSE, JP Morgan. Renminbi also included in the SDR. So we believe going forward, more and more the capital will continue to flow into the China bond market. And next one is the global investors in the CIBM market. And if you look at the left chart, so starting from the 2017, more and more foreign investors enter the market, and their holdings of the Chinese bonds actually increase quickly. But in 2022, because of the US Fed hiked the rates, and there is the spread gap between the CGB and the US Treasury actually inverted, which we see some outflows happened. At the end of 2022, global investors holding in CIBM is about like RMB 3.2 trillion, and their market share is less than 3%. But their holdings about like the CGB is still very high. It's about like 9%. Already become a significant force in the price discovery of risk bond. And this my introduction of the China bond market part. And the next chapter, I will talk about the channels for tapping the market. The earliest channel is QFII, which was launched in 2002. And in 2016, CIBM Direct was launched, which allowed the foreign investors to trade all the bonds in the China interbank bond market. In 2017, Bond Connect was officially launched. This is the key milestone for the global investors. After that, we see actually more and more the foreign investors enter the market, and their holding of China bond actually increased significantly after this channel opened. This is the comparison on different participation schemes. For the QFII, and you need and this usually is for the global investors interested in trading the equity. So if they get approval, they will enter the exchange market first, like the Shanghai Stock Exchange and the Shenzhen Stock Exchange. If they are interested in trading like CGB in the CIBM, they need to submit the application to PBOC and get approval. After that, they could trade those products and those bonds available in the CIBM market. For Bond Connect and the CIBM Direct, they are only allowed to trade those bonds in the CIBM market. But the difference between the Bond Connect and CIBM Direct is where your cash accounts sit. So for the Bond Connect, your cash account sitting outside China, that's in Hong Kong. But for the CIBM Direct, you need to find a local custodian bank like ICBC, BOC, and you need to sign the agreement with them, and they will help you do the settlement, and sometimes they will help you trade the bonds for you. And this is the key difference. And the trading hour for the onshore market is 9 a.m. to 8 p.m. Beijing time. So basically, it covers the European trading morning trading session. This one is the operating model of the Bond Connect and the CIBM Direct. The left one is the Bond Connect. If you look at this chart and this figure, so global investors, they can use Bloomberg or TradeWeb to send RFQ requested for quotes to onshore dealers like CITICs. There is a trading link between Bloomberg and TradeWeb and the onshore trading system. So after we saw the RFQ, we can reply. If the price is good, the trade will be done. After that, all of the trading information will be sent to your settlement bank in Hong Kong. This is CMU, which stands for Central Money Market Unit. This is under HKMA. And this CMU, there is a settlement link with the onshore custodies like CCDC and the Shanghai Clearing House. They will help you handle the settlement. This is Bond Connect. CIBM Direct, there are two modes. The first one is called agent mode. And basically, your onshore custodian bank will help you execute the trade. And your settlement is also happening inside China. And for the other one, direct investment, the bottom one, this is the trading part is very similar to the Bond Connect. You can also do the trades by yourself. You can send an RFQ through the Bloomberg or TradeWeb. Then we, like CITIC Securities, if we saw the price, we can reply. So the process is almost the same as the Bond Connect, but the settlement is also happening in China because your onshore custodians will help you do the settlement. These are available instruments to global investors. For Bond Connect, previously only cash bonds in CIBM is available to global investors. But starting from this year, Swap Connect is launched, so you can also trade onshore interest rate swap to hedge your cash bond risk. For the CIBM Direct, you can do you can trade more products like bond lending. And for some banks, they can do the bond repo and also like bond forward, other products. And QFI and RQFI, theoretically, they can do more because they can access both market. One is the exchange market, the other is the CIBM market. Also, QFI and RQFI, and they can also trade those commodities if they want. So Bond Connect and CIBM Direct is restricted into the products in the CIBM market, but for the QFI and RQFI, they can trade a stock, they can trade a bond, they can trade a commodity. So this channel actually has more choices than the other two. this is the onboarding procedures. And the key difference is the first step. For the Bond Connect, you need to open your CMU account with custodian in Hong Kong. And so for this one, actually, the whole process takes about like 2 months to complete if everything goes smooth. For CIBM Direct, because you need to find onshore banks like ICBC or like a BOC, these onshore banks, and you need to sign bond settlement agreement. And then they will help you submit your application to PBOC. So these steps takes longer. So we expect if you go through the whole process, it takes at least 3 months or longer. For QFII and RQFII, because there are 2 steps. One step, you enter the equity market. Second step, you need to enter the CIBM market after get approval from the PBOC. So QFII and RQFII will take even longer. If you want to just trade the CIBM bonds, the QFII and RQFII would be even longer. And the next part is about the products available in China market. I would skip most of those PPTs because in China we can trade those sovereign and quasi-sovereign products like CGB, quasi-bank bonds. We can also trade credit bonds. These are the NCDs issued by banks. We also have IIG, and high yield bond is a booming market right now in China because a lot of those property developer defaulted, so their price actually is kind of very low in China. We also have the pen bond market. A pen bond is a bond issued by those non-Chinese issuer and sold and traded in China's onshore bond market, like New Development Bank, Hungary, and BMW, and Mercedes. They all issued the pen bonds in the CIBM market. Also, we have a very large ABS market. Last year, the gross issuance of ABS is about like 4 trillion renminbi. We also have ESG bond. A lot of banks, they issued those ESG bond. So this market is also increase quickly. This is the product offered by our firm. This is called the total return swap. So if you can sign Easter with us, we can help you access to FICC products that are not readily available to global investors. And also we can offer very high leverage ratio to investors for them to allow them to trade some products like bond future. Also, like you could trade those risk bond with leverage like CGB and quasi-bank bonds with margin trade like about like 3%. You need only 3% to trade those onshore bond. Last, I also want to mention the new channel. This is the Swap Connect. Swap Connect was launched in May this year. All the investors enter the China interbank bond market can apply and get approval. These are the CCP cleared products, so you can trade those interest rate swap like 7-day repo, SHIBOR 3 months, and SHIBOR overnight. SHIBOR just like the LIBOR. And the trading hour would be 9 a.m. to 12 and 1:30 p.m. to 5 p.m. And all of these are CCP cleared. The operation model is similar to the Bond Connect. So global investors, they can also send the RFQ through the Bloomberg or TradeWeb. And there is also a trading link between these platforms and onshore trading systems. And we are one of the most active Swap Connect dealers. After the trade is done, the settlement is going through the OTC clearing Hong Kong. This is under the Hong Kong exchange. And there is a clearing link between the OTCC and the Shanghai clearing house. The onshore market, the interest rate swap, the most liquid tenor is 5 year or shorter, like 1 year and 5 year are the two key tenors. The bid and the ask spread would be less than 0.5 basis points. So this market is, I think the liquidity is deep enough. So if you want to hedge your cash bond risk, I think the onshore interest rate swap would be a good tool for you to consider. I think I would stop here. I would give this back to Antoine. Thanks.
Thank you very much for your presentation, Mr. Yan. And I guess it will be highly interesting for all of our participants. And I want to introduce our next speaker. He will tell us about more about equities. So I want to introduce our guest, Ali Dir, Senior Associate for Sales and Trading Division at CITIC Securities. Ali Dir, the floor is yours. You're welcome.
Okay, thank you, Anson. Thank you, Mr. Yang, for the bond market intro. So this is Ali Dir from CITIC Securities and Equity Sales and Trading Department. And I'm very delighted to introduce you today to our comprehensive services at CITIC Securities and our QP business. So I'll skip the first part because Mr. Yang has already introduced the CITICs in general. So I'll just go with the QP part. And so I'm at the equity department QP sales team. So we mainly covering the QP related business. Our department service both domestic and the foreign institution, professional financial institution. And the foreign institution line is established in 2004, and the team currently now has 24 salesperson, and they are in Beijing, Shanghai, Shenzhen, and Hong Kong. And we do have 21 traders in total. And we believe we are able to provide one-stop comprehensive solutions and provide clients with the simplest and most efficient and the professional service experience. So let me first explain the purpose and the development history of the QP structure. So the QP structure is a transitional agreement that allowed offshore institution investor who meet a certain qualification, and then to be able to invest in a permit range of the security product. But with the as the time goes by, now with the QP qualification, the investors from foreign literally have no difference with the local China investors within the scope and the rules of the investment. The QP structure was first introduced in 2002, and it has undergone several rules changes, and with the revision of the rules, it will be able to allow further opening up of the China capital market and encourage more foreign investors to participate in China Asia. So initially there are two qualifications. One is called QP and the other is RQP. The main difference is about the investment currency. The QP, the old QP used to means you have to invest in USD dollar, and RQP use RMB. However, in December 2019, the CSRC has merged QP and RQP into the new QP. So right now, there's no difference between QP and RQP. You can use both currency to do the trading. And there are several qualification requirements on application on QP license. I'll just put some key point. For instance, you have to have a solid team. You have to have no disciplinary action, and there's a lot of other requirements. We'll get to that. We'll get back to that later, and I'll tell you the custodian bank will be mainly in charge of that. And so now I'll briefly introduce a few time points of the QP reform. QP established in 2002, many restrictions with investment scope, investment quota. But now QP has canceled all the restrictions such as scope and quota, and opened up the Chinese market to a greater extent. And like I said before, right now, if you have the QP qualification, investor have no difference with the local China investors. And you can do the IPO, you can do the private placement in the secondary market, and yes, so you can be treated as a mutual fund in China. And here is some overall market situation of QP and our QP business. So right now there are a total of 780 foreign institutions has to get a QP license, and our market share is around 35%, and we believe we are the top QP broker in China. And right now, more and more institution has extending over $2 billion quota. And according to the data, there is the top 10 shareholders of QP can be included in 7 and 18 A-share stocks, and with a total value about 165 billion. And so you can see their long-term investment commitment to China. And the quota limit has been canceled right now. And from the investment behavior, we can see that QP total holding, they're more preferred to the blue chip stocks, and they have a total holding of CSI 300 index component stock account for over 80% of their allocation. And we did some research about asset allocation, and as of December 2022, for all the foreign investors, nearly 38% of their investment in equity and 37 in the bond and fixed income. The other are for the money fund market. So from the investment behavior, we definitely can see the QP investor prefer a long-term investment, and they have a comparatively relatively very low turnover rate return. The turnover rate compared to the market average. And there are some different type of QP. There are some are security firms, some commercial bank. I'll show you some more. So these are some of our key clients, and we serve banks and asset management and a lot of pension fund and also lots of insurance, etc. So under the QP structure, just like the bond market, the custodian bank and the broker plays two crucial parts. Under the QP structure, the bank is responsible for all the application, clearance, and settlement. So the broker is only responsible for the trading. Therefore, QP should have a designated custodian bank in China. And the custodian bank will be responsible for submitting all the application forms for the client. And they will be responsible for you to either get a QP license or not. And they will be helping you to open the FX and the RMB accounts. And the custodian bank will report the material change on behalf of the QP to the regulators. So as I said before, like custodian bank should be the first thing if you want to get a QP license. But no worries, we have been working with different custodian bank for so many years. So if you want to get a QP license, you can just directly come to us, and we will introduce lots of very great team that we've been working with year on year, and I will let them get to you, and they will be taking care of your QP license. So they will be in charge of the full investment process. And there are a couple regulator exchanges during the entire application process that I think you might need to be noticed. So first is CSRC. So CSRC, they mainly be in charge of approve the custodian and QP qualification. And there will be the administration of the QP investment activities. And second is the SAFE, we call it SAFE. The SAFE usually, the SAFE are in charge of opening the foreign exchange and special RMB account. So to get into the stock market, no matter you invest in the equity or the stock, you need to have two accounts. One is for the cash account, one is for your security account. So for the cash account, SAFE are be the responsible for that. For your security account, DCC will be the main in charge. So they will open the settlement account, and they will open the security account for the QP and for the custodian. For the broker, we're only dealing with the domestic trading activity only. And these are the rules that they play in China, and their rules to they are in charge for the QP. Yeah, so here are some steps, and this mainly lets you know the whole process to understand the general application process. And the investment doesn't have to be the expert on that one, because like I said, the custodian bank will be fully in charge of it. So first of all, you need to appoint a custodian, and the custodian will ask you to prepare the required document and papers. Usually take 3 to 5 weeks, and the most important thing is your investment plan. So there will be required a paper that you need to explain your investment plan and your future investment activity in China, and your investment scope as well. And then the custodian bank will help you to submit the form to the CSRC, and the CSRC will make the decision within 10 working days. If you pass it, then you have your QP license. And they will tell you which one or where it needs to be fixed. And then it's the safe registration. The safe mainly opening your RMB and the fixed account. We generally call it cash account. Then for the account opening, you need to open your cash account and also your security account. The security account will be open in CSDCC, and during the audit process, the custodian will be fully in charge of it. So investor doesn't need to worry about it. And then once all of your cash account and the security account are ready, you are able to transfer your fund to the cash account, and you can do the investing. And when it comes to the investing, the trading part is all in charge by the brokers. So here are some investment skills, but right now you can just treat it yourself as a local China mutual fund investors. Okay, so there is a general investment and trading flow. So due to the special structure of the QP trading, all overseas investors need to place order through the brokers. Whether it's a stock or bond, you can do it via fixed, you can do it via Bloomberg. It's just basically it depends on where you get used to place your order. And the broker need to fully represent the client's operational needs. And the following is some basic trading process. The trader will send the trading instruction to us, and us will be responsible for placing the order and docking with the exchange. And the money that should be deducted after the exchange will be checked with the custodian bank, will get back to the custodian bank, and the security will be custodied in the CITIC security account. So it's a quite simple structure, but every QP investor needs to be following the exact same process and structures. And here's the settlement flow chart. And when it comes to the research parts for our research services, we believe we are one of the largest research departments, and our research team consists of more than 400 analysts, and making us one of the most comprehensive and professional research team. Right now, we're covering about 1,500 Asian listed stock, account for 30 of the all listed company in Asia. And we almost cover all the mid cap and the mid cap or small mid cap stock in China. And yeah, so this is how the CITIC research department organized into 11 general and industry groups, and including microecon, FICC, strategy, infrastructures. So for instance, our FICC team has 18 analysts in total, and our head analyst, Mingming, used to be working on the PBOC as the head economist. And so we do have the best FICC team in Asia market. And also our research team published more than 1,000 high quality research report to the market every year in area including market research, industry research, company research, And our FICC have a various of research product daily and weekly. And we have also ranked as the best FICC research in last year. And we also offer some research services such as online roadshow with our analysts. The Zoom meeting or the Tencent meeting both well works. And we can also schedule trips for the investor to visit companies in China. Yeah, so I think that will be all. So again, like we are providing a general one-stop solutions, and we believe we are one of the most solid partner if you have the major interest in stepping up the Chinese market, and we will help you all the way through your application and investing. So if you are interested in CBIM market, feel free to reach out Mr. Yang, and please. Yes, thank you for having me, and please feel free to contact me anytime if you are interested in QP license. Thank you. Anytime.
Thank you very much, Aladir. I think it was very useful for our participants to know this information about QF status. And now I propose to answer some questions from our viewers. And one of them, I guess that I know the answer, but I will repeat it. So, is it possible to access derivatives trading through your bank? I mean, options on futures, options on stocks, and so on. So, using one of these ways for entering Chinese market, is it possible to access derivatives market, derivatives trading? Mr. Yang, please.
I'm not sure about the stock option, but from what I understand, there is a very limited option trading in the onshore fixed income bond market. So if you want to trade those options, I think it's doable. If you sign the E-Star, then you can trade with us. But I think the liquidity is not good, and the price may be not good, and deviate a lot with the offshore markets. So I would say it's still very difficult.
Yeah, thank you very much. And the second question, there are a lot of questions about this topic. So how to contact your bank for your services for our global clients, and do our customers have to contact your company's local office in some countries, or can they write to you directly? So, and start this process remotely.
If you're asking to apply for the QP account, well, there's no need to come to our office or came to the local office. You just need to first of all find a custodian bank, and we will help you to find a custodian bank. And you don't even need to go to the local custodian bank. They will. We will get it done all by email, and you don't need to open an account in CITIC Securities to visit us in person. No, you don't need that.
Yeah, thank you. And one more question. I guess Mr. Yan mentioned this point. So just imagine that there are some problems with access to Bloomberg Financial Terminal. So the client, so there is no Bloomberg Financial Terminal. There are some possible ways of how to enter the Chinese market without these services, just to maybe direct cooperation with your bank or something like that?
For the Bond Connect, you definitely need to use the Bloomberg or TradeWeb. And I also mentioned another channel is the CIBM Direct. So if you can sign agreement with onshore bank, they can help you do the trade. So in this way, there is no need for Bloomberg or TradeWeb.
Yeah, thanks. So yeah,
the equity market, if you couldn't access to the Bloomberg, it will be also usable to use other different method to send your order, or you can give us a call or something like that. It was just optional for the Bloomberg.
Yeah, thank you. And I think we can finish our online webinar. I thank our speakers for their participation, and we really look forward to further cooperation with you. I also thank our viewers, and I hope they enjoyed the webinar. So see you at our others, our Seabones events. Thank you.
Thanks a lot for inviting us. Thank you.
Thank you.